Good morning, Quasar Market. Sorry for that little hiccup here. Tornado trying to take us down in Tampa, I guess. How you doing, Big B? Welcome back.
I'm good, man. I just got a chance to see the Panama Canal. I think it's been in the news quite a bit. And there is a tornado warning in my area. So sorry about the little blip there. Look, it's very simple. I think people are unhappy about the markets right now. We're seeing a pullback. When pressed about the world, Donald Trump did not talk about the recession. I remember back in the campaign, he said, under me, the world will be better. Under me, the markets will go up. Under me, this and that. Under Biden, the markets will crash. Well, I guess Joe Biden left at the highs and Donald Trump's taken over. And now he's saying that he's okay with this. We need a little bit of pain in order for this happen, right? Okay, all right, then we're going to live through this pain, and here it is. I'm not scared so much. I think that the markets are pulling back. Look, I get it. I understand that the stocks were way, way high and everybody was happy and we're on a sugar high. I get all that. And we've talked about that, right? I mean, Howard, you and I were talking about in the Bitcoin world where I took off at 96,500. I mean, here we are at 83 and we bounced around 80,000. I guess the Dow's going to open up around 500 points to the downside, right? 300 points to the NASDAQ. Again, right? It's been a rough market. But look, for me, I'm not too scared about this market. In fact, over the weekend, I think I posted several times. I went long. on Bitcoin around 80,000 something. I don't look at the last buy there. Solana, a nice pickup in Solana, and I picked up something that I didn't really believe in so much in the past, and that's Ripple. I picked some Ripple up. So wow, there we go. So look, this is how unscared I am. And yes, I did something that I haven't done in a very long time. I actually pounded the table, and people know me. That's when I pound the table. It's time to go.
Absolutely. You were saying it's now time to buy. I did buy some Bitcoin on the dip. That's about it for me, and that's for my long term. I'm still staying pretty cash heavy here. For the next day or two, I'm cautiously optimistic like you. I'm not scared. I just don't know that we've hit a bottom yet. I'm not trying to pick a bottom, don't get me wrong, but I'm at that spot where I'm willing to give up 1 or 2% in the beginning and follow in a little bit. You know what I mean? As I'm going to be a little cautious. I'm being honest. I said that all last week to everybody. I'm still there. Not as much there with Bitcoin. Bitcoin to me at 80,000 is a steal. I'll get in there, pretty much every time it dips to that. If it does, it was a big nothing burger basically on Friday. I said that. I warned everybody for a month, and especially all last week about it, that nothing big was going to come out of there. In fact, less came out of it than I was even hoping for, because I did think that we would see the announcement of no, income tax or capital gains tax on crypto, and they didn't even go that far. So disappointing at best there. But it didn't. Again, I bought Bitcoin on that news. I'm good. That this wasn't part of it. It's funny. I was, as you mentioned, you were posting on Twitter. I did more replying to people dispelling mistruths out there. A lot of people like, well, now the government can crash the price of Bitcoin. 200,000 Bitcoin versus 21 million is 0.02%. It's not even a percentage.
When people say that to me, that the market can be crashed because the government's going to sell their Bitcoin,
right?
The gold in Fort Knox hasn't moved, right? I think that's
we don't sell much, right? We don't. The government doesn't
sell. They never sell their gold.
We're acquirers. And they should be. I mean, that's what our reserves are for, to acquire. So that's what So that's one of the things I did want to put out there for people, is that I also said all along, right, that we would see them use the money that was already in the government that was seized. I still think they're going to figure out an accounting way to say, hey, look, we sold it from DOJ to Treasury, and we got capital gains of X amount of dollars, so they can pat themselves on the back and be happy. I'm okay with that. Not selling 200,000 Bitcoin, especially under the last administration, is actually a win in my.
Correct, because now we know that, because the previous administration just sold on a whim. Whenever they just felt like they
just randomly. They did it just at bad times. They basically did to try to capitulate the market down almost. Steve, we do have some new companies in the S&P 500 here. I do put them across our screen. DoorDash, TKO Group, William Sonoma, and Expand Energy. Very muted response to them all. Were you surprised by the group here? I have one surprise personally. I'll wait for you though.
Yes, I think that I think for me, it's going to be the owner of WWE, TKO. Now, for those of us that know, back in the day, I said TKO is going to be a great thing. That WWE, there are a lot of people that watch it. In fact, I was just in Mexico watching Lucha Libre. I'd never been to a match, and I thought, okay, let's go watch that. I get it, you know. There were adults wearing masks and, you know, favorite shirts of their favorite players, knowing completely that it was a fake sport. Sorry to burst anybody's bubble out there, but they enjoyed it. And right, that's what we care about, is entertainment and understanding that our lives. And yes, so for me, WWE being in the in the S&P 500, top 500 of the country. Think about that. It's 507, 508. It's not quite 500. That's kind of a big deal, but natural gas, heck no. That's our biggest export in the United States. That's what we know.
Yeah, I'm with you. TKO is the one that surprised me. I thought either Coinbase or one of the other ones they talked about, Coinbase down on basically on the news, that they weren't included. Many expected them to be an inclusion in there. That was sort of my one surprise there.
Yeah, no, I don't think it's a big deal. I think it's just a matter of time before they get put in.
I'm with you. In fact, that's exactly, I forget who, I think it was Barclays that came out and put together who they think is next, and they have Coinbase on there. But it was ones. Now, ones removed, Steve, were Borg Warner, which is an auto system manufacturer, Teleflex rather, Celanese, which we know has been getting destroyed anyways across the markets, and FMC. Any surprises here for you?
Not really. Ag sciences are definitely something that are still in the future for us, but I don't think that it is as a company. I think one of the things that we're looking at, you know, especially with AI, is how ag is going to yield more, right?
Right.
Produce more, and so
cost less to do it.
Correct. Yeah. So I don't see companies doing it as well that then the AI is doing it. Yeah.
Yep. There is also a couple of things. We go a little bit deeper here at Quasar. I found out there's a mid-cap 400 that had additions today. Also, Alaska Air. This one was more interesting to me because Alaska Air, I love that company there, Specialty Materials. Bath and Body Works back alive. That surprised me. EchoStar, which is a competition to Starlink, and I think it's important to watch because of the foreign countries like you've talked about that don't want to do business with Elon Musk. And then VF Corp. And the only reason that really caught my eye, and that's how I found this list, is they're one of the few on my just general Quasar Markets watch list that were up this morning.
Yeah, it's very simple.
Like, why are they up? And that is why. So that's how I sort of caught this list as it is.
Yeah, this is very simple. Bed Bath Body Works and all of that. I don't know just exactly how much money that my wife spends at Bath and Body Works, but a lot.
And neither one of us should know those answers. It makes us happier.
My mom is the same way. I will say this much: the specialty retailers in that aspect is going to do very well. And I tell you one thing that I think people are going to be shocked about. I like the Container Store. I think it helps me be a little bit more, and I'm not, you can see my office. Sometimes it's a little messy because I got so much going on, but the Container Store, right? And so you saw Bed Bath & Beyond going under, Container Store going under. The two of them are now going to get together and make one better store. And I've said that those two stores need to be together. That's great, right? The other companies, look, it's very simple to me. VF Corp is making clothes. And the one thing that I have noticed as I'm losing weight is I need clothes. So I think you're going to see a definite pop in the clothing industry right now, especially in the next 6 months to a year. So I do like VF Corp here.
We are about 20 minutes away from the open. I want to just quickly get into it, tick down about 200 right now. Advanced decline, one of the worst I've seen in a while, down 2,100 here, even before the cash market opens. VIX is up 12.62% to 2633. We talked about it, it's blow off. It's sort of been in that 23 area.
I can tell you right now, Howard, this is crazy VIX numbers right now. That's it. You see it right there. When the VIX gets this high, it's a sell-off. And you know what? I don't tell anybody what to buy or sell, but I'm buying naked puts on the VIX probably for next month. And if anybody would ask me what number, the range, I'd say anywhere between 20 to 18, somewhere around 18, 20, somewhere around there, buying naked puts. This is silliness. This is too much scariness. The world is not running around. The world is not ending tomorrow. It may feel like it, but it's not ending. Is recession coming? Yes, I'm not going to lie to you, anybody out there. Hey, listen, recessions, but the scared world out there is too scared, right? So I'm okay with it. I think we're okay.
Yeah, I would point out just that people want to be aware there, because they break above that 28.25. You see the explosive areas you start to get into there, because short covering does have to happen in those cases. But yeah, it's just been marching up. That's the other thing I noticed, Steve. I couldn't really find an area where it marched up outside of here in September of last year at that sort of prolonged move to the upside. It's usually just that quick blur. So that's also the difference in the market structure I noticed there. We look overseas, most of the markets were down in general. We have stocks down almost 1% here, and I do have
hearing reports now that Trump may meet Xi Jinping in China as soon as April. That's interesting to me. That another reason why the VIX should probably fall, right? If we start to see talks between Russia and China and the United States and Ukraine war ending and all these things, it may take some ease off people's minds. So, that's a good thing, I think. Wow.
Yeah, but for every one of those, you have Mark Carney just got elected, in Canada. So, it's one of those, and I'm not trying to be a downer, but volatility is volatility. And, I'm with you that there is hopes in China, and especially with their deflation looming, that is going to be something I'm going to talk about next here. But when it comes to the world stage, there is definitely, whether it be Europe and Germany saying, we're going to stand up to the U.S. and we have to stand on our own 2 feet, which is what we want. Again, I took it as a net positive that Germany's going to spend on their own defense very much. You weren't here. Do you have any comments, on that, by the way? I thought, we talked about it here, Steve Flanagan and I also, because such an important move for Germany and for the Eurozone.
I had an interesting week. I was on a cruise. I know that shocks everybody here. Look, the world's a very small place, no matter what anybody thinks, right? You jump on a plane, and in 17 hours, you can be literally halfway around the world in Japan, right? So it's easy, and between now and Zoom and everything else that we have, we can have these conversations, right? This is not exacerbated things, and it's not like we have to wait for news and data anymore. And I will say that, having internet on a cruise ship, watching people on their phones, watching people looking at the news is a different world than it was, say, 5 or 10 years ago, right? That everybody wants their news data and fast, and headlines are very important. And it seems that headlines are just pretty much driving the algos right now, okay? And when you ask about Germany and you ask about those issues, you're talking about companies and countries are trying to get together, right? And those wheels don't turn nearly as fast as the news cycle and headlines.
Sure.
Cycle, right? So if I get 25 headlines saying Germany's going to, construction spending is way down, and recession in Germany, and things are going bad in Germany, and then all of a sudden, well, the new German minister is now saying we're going to do this. it's an automatic flip, right? That's why I'm saying to people, don't get nervous over all of this recession talk. Don't get nervous over all of this pullback and I'm going to run for the hills, because it's not the case, right? The world isn't ending today, but the headlines make it feel that way. And one headline can turn everything around. So when I look at Germany in general, are you telling me that Germany can't produce more cars that they need to? Germany can't be a consumer, a big one? Again, yes, it's going to be, and it is. Right? Will the Bundestag, their parliament, will it change? Yeah, probably. Yeah, right. I mean, there's a lot of things. We saw that with the election. So don't get wrapped up in every second headline. Right? Get your portfolio based, what I call it, grocery shopping. Right? Have a list of stocks that you want to buy and have them ready. And the world isn't going to change just because of Germany. The world isn't going to change just because of one or two countries. Now, it will because the United States or China or Russia make a big deal. That's different. But I will say this much. We got some pretty good buying opportunities over the weekend with crypto. You're going to probably get some good buying opportunities today. One of the things I talked about was oil. Right? If you want to know whether or not we're going into recession, is whether or not oil prices continue to slip. And they're not. They're bouncing. Where are they bouncing off of? The 68 handle. Why? 66, 68, that area. Why? Because OPEC goes, hey, you know what? Guess what? Germany needs oil, right? UK needs oil. United States needs oil. This is what I mean. So if you really want to look at the outside influences, you're going to hear from Steve Flanagan later today about the dollar. The Dixie is an influencer. And yes, news from Trump is an influencer on the markets. But here's what I'm saying right now. You're getting good opportunities to buy back in. I mean, this is great. If you like NVIDIA at really high prices, which I did, still do, you're going to like NVIDIA here. It's what I always say, right? If you liked Apple up there, you're definitely going to love Apple now. If you liked Google back then, you're definitely going to like Google now, because Google PE ratio is under 19 now, right? This is what I mean by looking at the markets from a different perspective and not just your charts. And as I said over the weekend, stop pearl clutching your charts. Your charts to only tell you where things went to or where liquidity is. It doesn't tell you. News comes in, bam, your charts are meaningless, literally meaningless. And trust me, as somebody who's been charting since graph paper and pen, and that's how old I am, I will tell you right now that there's a change here going on. Right now, it's algos are buying, right, or trading, and machines, AI machines are telling you what to buy and sell, right? So don't get nervous about this sell-off. Trust me, JP Morgan and Goldman Sachs are happy to sell off. They love it because they want to buy more. They're not in the business of selling. They're in the business of accumulating. So is the governments. So I'm not too worried about this right now. I like this. I like this opportunity. And as I always say, take advantage of it.
Absolutely. We got some key data this week I put on the screen. We have New York Fed consumer expectation today, CPI on Wednesday, a big one, and PPI on Thursday, of course. And then we get consumer sentiment on Friday. So we have a bunch of stuff going on in Asia. I had put across the board there. China finishes its 2 sessions, which is sort of their big political week. Then they're in Japan. Their wage talks are being negotiated right now. They're looking for a 6.09% hike. So we'll see what Mr. Flanagan has to say about that. India's inflation has dipped a little bit. So could we see the RBI do some rate cuts soon?
Yes.
So good. Yeah, we hope. So we'll have Mr. Flanagan in at 10 o'clock to take the reins and talk about those items. As you mentioned, bank stocks are all getting hit on the news, over the weekend. JP Morgan, Citi, Wells Fargo, Bank of America, and across most indices, as I was looking at it today, most of the steel's down, most healthcare, restaurants. There wasn't really a sector that I could find that was moving to the upside too much. Chinese stocks were getting beat down a little bit. Also, we do have earnings, so maybe earnings will start to turn if it's not CPI and PPI that move the data. Oracle's today, I will say that earlier they were one of the companies that was down. I believe, hey, I'll just type it in, ORCL. They are down about 2% pre-market here as they get ready for their earnings. We also have Vail Resorts here, Steve, one of the ones that I finally want to bet with you on. One of the few there, and they do their earnings. I'm interested to see how those strikes in Vail and Beaver Creek have affected their business and bottom line. Later this week, we have Adobe, Lennar, Dick's Sporting Goods, Kohl's, Sentinel One, DocuSign, Ulta, Dollar General, and Lee. Not a big week here on earnings, so it really probably needs to be.
I would agree with you on that, but I'll tell you one thing here, Howard. Every one of those companies will give me a better feeling about what the retailer is doing, right? Ulta Beauty with hair products and consumer products, right? Dollar General, lower consumer product there. DocuSign, are people signing documents, right? Kohl's, obviously, are they buying clothing, right? Again, Dick's Sporting Goods, it's very simple. Are people going outside again? Are they moving around the country? Adobe and DocuSign, same situation there. And Lennar, how's the home prices going and how are home sales going? So this could tell you a little bit more about the world, right? It could give us a little bit more insights into buying and selling of homes for sure, and whether or not the middle class is slipping and buying in a Dollar General, which can always give you pretty good insights too as well. I know that we've got about 8 minutes going into the open. I'm gonna, if you don't mind, I'd like to share my screen over the weekend. I think I posted this. Let me just present here. Share my screen. Let's see if I can get this correct here. All right, and hopefully you can see that screen there. This is something I built over the weekend so that people can get a better visualization of how tariffs affect the markets, how the world actually works, and how interconnected we are, right? What is this chart showing? I hope everybody can see this chart, but it shows me the inflation rate, shows me unemployment, and it shows me the 10-year minus the 2-year, which is we know that these are what we call the inversion rates. We want to make sure. All right. So in the 1960s and 70s, we saw inflation. And of course, I'll pull that up right here, pushing up, right? There's the inflation of the 70s and 80s, right? I mean, I can remember my parents talking about how they bought a home at 16%, back in the day, right? As they call it, back in the day, right? So this was affecting, right? People wanted to buy homes, but they really couldn't. And what was wrong here was that we had high unemployment. All right. So unemployment with high inflation caused what? The 10-year and 2-year to invert. So in the 80s, we had an inversion, and that in a lot of ways, Jimmy Carter got kicked out of the White House, right?
Right. Just
so
for that.
In the 80s, we saw Reagan coming in between 80, 82 all the way, right? And so we saw a little bit of what? Inflation coming way down. Now, we know that the Fed likes 2%. So right there's 2%. Now, in honesty, we're way below the true inflation rate, or we call trueflation. All right. So the Fed's kind of wrong in a lot of ways, right? All right. Let's get back into 2000. So we saw the 10-year minus the 2 going way down. We saw unemployment coming down, and we saw the inflation rate really coming down. That was under the Clinton years, right? 92, 93, all the way to 2000. That's when we saw great things happening in this country. And actually, if you remember correctly, the budget did very well. We actually had a surplus for the first time in this country. Now, when the Bushes came in, obviously, he was still trying to keep that up. But you'll notice here that what went up? Unemployment. So unemployment went up. Inflation kind of remained the same, but we also had a war. So we saw wartime sales were going up. So what happened? The 10-year minus 2 years fell. So people could buy homes again. Let's push it back to 2000, and right here we obviously know that we had 9/11 too, so that also hurt too as well. All right, so let's go back and let's talk about 2010. And in that time frame here, we noticed that the 10-year and the 2-year came up, so rates went back up, but the split between the two. But we also saw the unemployment rate explode, right? So it went right back up, and that's when we saw at the end of 2017, Donald Trump, right? So we saw these numbers, unemployment coming down. We saw the 10-year and 2-year coming down. So we know that was happening. But what went up under Donald Trump? Inflation. Now, a lot of that can be due to COVID. So I'm going to knock some of that off. All right. Here we are today. It's 2024. So what are we seeing? And I wrote in here, it's happening again, right? So we're seeing inflation kind of coming down. We know it's coming down. So I think when you talk about the Fed, talking about inflation, it is coming down. And you're seeing unemployment ticking up. But you're seeing the 10 and 2 years starting to invert again. So we have a thing called stagflation. Now, this is nothing new. This is when inflation goes up, unemployment goes up, and I guess buying still happens. So that's a problem, right? We don't want stagflation. So right now, this is why that Trump and myself are calling for lower rates. They need lower rates. Why? So when these rates come down, inflation comes down. Because you notice that when inflation was going up, we need to push the 10 and 2s down. So when the 10 and 2s came down, we did that to get inflation down. So they need to meet, right? So when are the good times? When were the good times, Big Beat? Well, it was during this time right here. And what happened? It was when all three lines came down at the same time. We're not seeing that, but very close. It's happening again. So we need this inflation to get down to here. We need the unemployment rate to come down, which we're not seeing because of the government layoffs. But we're seeing the 10 and 2 coming back up. So this is the sweet spot right in here. We need this to happen. Look at this in the middle of 2000s. It happened. This happened again in 92. So we started to see this come back down during the 90s. We saw that all three were coming down. We need the same thing, meet in the middle. We need these in the middle. That's what the Fed is talking about. Now, they're saying that they don't want to lower rates because that it's coming down its own and inflation could rear its ugly head. Well, that's fine. But this is what we're talking about. So we got about 2 minutes now of the open here. Look, I get it. But that's my up pick today. I think that we're getting closer to that. And that's why I think we need to see the Fed start to lower rates.
Absolutely can't argue with you at all on any of that, Steve. Definitely think rates, it's about time. I did have somewhere in here a line about the fact that I've noticed on FedWatch now we're looking at a 75 basis points estimation for 2025. So exactly what you're saying is what, you know.
And why do that? Why not just spread it out, right? Why not spread it out?
And they still have it at like June. Here we go. I got the headline coming across here. Yeah, they're pricing in 75 basis points cut with the first cut fully expected by June. Like you're saying, why not today? 2 minutes from the open, Steve, we'll come back. I do want to get in Redfin getting acquired by Rocket, you know, there. So nice little thing. Mergers and acquisitions. We've been looking for it. Haven't seen enough of it. It does have it up 72%. So I did want to bring that in before the open here. Pretty big headline here. So Rocket Companies, 1.7 billion, all stock deal. And Rocket RKT was down tremendously on that news. I think it's good news even for Rocket. I get that they're paying. I guess what I'll have to break down more, and I don't know if you know offhand, was that a good price to pay for them? I guess if we look at Redfin's market cap, it would give us a better indication.
Well, they obviously paid a little. They paid a little more than probably the worth. They're doing that for the future, right?
Yeah, 735 million market cap.
Right, but this is a company now that can be everything, right? Can do your mortgage.
That's what I liked about it. Yeah,
it's an all-in-one kind of company. Yeah.
Yeah, for people that don't know, Redfin listing company where people list their houses, where Rocket's the mortgage company and does all the back end stuff from there. So good intersection.
I do like Rocket now. I think this helps them.
That's what I was saying. I like that on that dip. So I'm going to keep an eye here on them personally today because I do think that could give a good opportunity.
And
here.
We are.
I would not be chasing Redfin personally. Open with tick negative 400 to start off with. Advanced decline right around negative 4,000. VIX at 2641, up a few basis points here.
I'm going to buy puts on the VIX here at some point. So you know.
Okay. Dow Jones is down 1% here on the open. SPY down about 1.38. QQQ, big loser in the indices, down 1.73. I'll start to take a look at the charts here, see if anything's approaching And I've talked about it, Steve, over the last week when we broke below that 200-day MA. For me, we got to sort of get above that to really think the recovery is coming back. So that's what I'm sort of looking at personally here, looking at it more on the SPY where we're closer, quite honestly, as my first leading indicator. If I see the SPY get back above, this 560, 570, I'm going to say, then I start to feel better, like you were saying about dipping the toes and making the purchases. If we look, Mag 7, NVIDIA down another 2% here.
I like this. I like this a lot. I think this is a buying opportunity on here, to be honest with you. Jim Cramer has a very good post here, and I just put it out there, that a lot of the stop out programs hit this morning, and I think that that's cleaning a lot of people out. I think capitulation has happened, and I think it's over. I think this is it. Look, the pain is tough. I'm not telling anybody to buy or sell. We just don't do that here, obviously. But I like this. I do. I like this a lot. I like the buying opportunities here. I think you've gotten we talked about this morning, right? I think this is a good opportunity to start getting your groceries bag out and saying, okay, time to buy. The market can be more irrational than your account can be, right? And so you're seeing these companies getting stopped, your accounts getting stopped out, meaning that you have limit orders in there and you can't handle it anymore, and the world's ending, and you got to get out of your positions. But I kind of like the buying here. I do. I really like this here.
And what they're talking about also is on those algos, certain funds have rules based on their systems where at a 1% or a 2% down move, they are forced to liquidate that position. So it happens very rapidly. I will mention, I don't think it's a 1-minute thing. I've noticed it takes about 20 minutes for it all to work its way through. I know algos are instantaneous, but then there's another reaction. And to me, it seems to take that, and then you add in the retail, 0 DDT people that are playing at that time in the morning. I've noticed that I usually like to wait here the first 20 minutes or so. QQQ continuing to drop here, 481.90, low of the day. It's at 482. SPY, nothing's moved above I've been looking to see, Steve, we've been talking the last week here using, again, a leading indicator of the VWAP on the short-term chart to see when things are starting to turn in the market a little quicker than some of the other indicators. Not seeing it so far. We do see SPY attempted to break VWAP, rejected firmly at that so far. VWAP there right around 568.53. So some key areas to keep a look at. Bitcoin holding up here, 82,339. Again, one that got hit right off the start with those algos. Again, that would be the perfect example of one where it opens down more than 1 or 2% and the ETF sell off immediately. Let's take a look at DoorDash here, Steve. They were one that were.
And when you talk about the ETF selling it, you're talking about retail. Just can't hold it, right? I mean, this is look, it's dumb money selling, smart money buying. This is exactly, look, the markets are very simple. It's just a machine that doesn't care about you, right? And people's emotions get stuck in that machine, and it jams it up, and here you are, right? The world's ending. It's over. No, it's not. It's not ending. We're gonna. What, you think Bitcoin's gonna go away next week? No. Could it go to
481.50? So we're setting new lows here on the Qs. Again, still dropping to the downside. Key area I'm watching this morning is any break below the low that we saw on Friday.
I'm not. I'm still long my NVIDIA. I'm not changing my thesis on that. I don't like the price, but I'm not. My thesis hasn't changed. The NVIDIA RTX cards are sold out. Good luck trying to find one. I want one. I can't get one. Right? Yeah. So no, I think that the technology. I think we talked about this. That Apple seems to have some pretty good products on the horizon. All right. Well, the new MacBook Air came out. They're saying the MacBook Air is as good as the MacBook Pro back in the day. Good Lord, that's really good invention and innovation, right? So these are all major pieces of the Qs. So no, I don't think so. I think Google and I guess now it's 18. Yeah, I think you've got some pretty good opportunities to buy here.
Yeah, watching the Qs here again, bounce back in very similar area to we saw on the lows of Friday. So that's the spot I'll be watching here, this 480.60 area. Stay above that, and we can look at it to still recover a little bit. Anything below that, I think we do start to slide off as more capitulation hits the market. Tick is slightly positive here. So there you go. We're finally getting the tick to move positive here. Maybe the algos are done. Up 143. Advanced decline has moved from down 4,000 to only down 33.50. So again, we're seeing everything start to move in a upward direction here on some of the leading indicators that we watch. VIX 2634.
Treasury Secretary Bessent now says that there's going to be a detox period for the economy. Okay.
Yeah, he spoke about that last week, Steve. I'm sure you saw the news while you were on vacation, but his talk was that, basically private companies needed to invest in themselves and get private investment, that the days of sort of living off of government was over, and that it might give a little bit of short-term pain, but that we were well set up to take care of that and move forward. And I agree. And we've talked about it. Government spending shouldn't be the way that we're growing. We have enough private money that we could be definitely sitting on the sidelines to be allocated. So definitely keep an eye there.
Tesla up here. Oof. Down almost 6% here on Tesla.
Yeah, Tesla, and I will mention there too that I saw, and I do have the headline here. Let me just get to this. Dan Ives is still maintaining a 550 target there. So he's not scared, so to speak. Right now, big loser is Robinhood when it comes to down almost 10% here. I will mention that there too, Robinhood was hit with a indictment by the DOJ, not crypto related this time, but that does have them down here. That news for sure.
Yeah,
I thought I had a headline on it. I just can't find it as well. I got too many headlines. MicroStrategy getting hit here. Steve, did you see they're going to raise $21 billion more again now in a stock offering?
Yeah, I mean, people asked me that several times about MSTR, and I've said the same thing. Look, he just keeps selling his own stock to buy more Bitcoin. I don't like MSTR, the stock. I like Bitcoin, the Bitcoin, right? So, because
it's starting to get crazy, even for me, even for a diehard like me. I'm not gonna lie. It's at what point that because what starts to worry me there is he becomes too big. Where I also get worried there's too much centralization. I don't want the bank of Michael Saylor in the world of crypto. So
we're going to have that no matter what. Yeah, that's already done. I mean, we're going to have.
But from a view there, I would I'd like to see other companies that were following suit be able to raise that money as easy as he has. Let Mara have some of it, let GameStop have some of it, let these other companies get involved, and then it's spread out more at least, and we get more decentralization. Those are the big losers. Let's take a look and see what is moving to the upside here.
Yeah, I mean, this is nothing in this world here right now is scaring me, right? I mean, I'm not seeing talk of war. I'm not seeing talk of all these things. So, to me, I'm not too nervous about this, right? Just doesn't bother me. I'm okay with this.
Beacon Roofing Supply, and I actually know what's going on there. They're in merger talks with QXO. So Beacon Roofing here up 8.39% on that news. So again, two sort of merger acquisitions, both moving the market, some of the bigger leaders. I see Celsius Holdings. Steve, I wanted to follow up on that one because you and I sort of joked about it, but they were up nicely on news that they were purchasing Anani, and we sort of laughed it off because neither of us was that familiar with it. As I've done more research, that is one of the leading sort of energy drinks in the market when it comes to younger women and what the consumer there is buying and the TikTok people. So it actually it's moving them. And as you can see, at the time of the announcement, they were trading down around 24, now down around 29. So it looks like that merger or acquisition might be going through. It's helping the price nicely here. So good.
Have you ever been to the line at a grocery store? The different types of energy drinks. I mean, there's 5,000 of them, right? Monster Energy used to be. I mean, I remember trading Monster Energy back in the day. And look at Pepsi Cola. Look at Coca-Cola stock, right? I get it that Celsius, but I don't see this to be something that is going to. I don't see longevity in this stock at all. I think it's just a pop today.
Okay. Looking back at the Mag 7, NVIDIA is moving back up a little bit here, only down at 1.5%. Apple, though, still down 3%. Google down more than 3%. Tesla, the big loser, down over 6.2% right now, trying to make a move back to the upside there, but not doing much. Netflix, that got over 1,000, now back at 870. So Netflix is one that has sort of quietly given back all of its gains here in
It has. I like Netflix now. I think there's some new movies coming out. They got a lot of Oscar winners. I do like Netflix here. I do. I keep saying it. Anything under 1,000's a buy. Anything over 1,000 is pretty much a sell. So when it gets up there, be careful. But there's NVIDIA back over 111 already. 111.07, 111.09 now. So I'm not too worried about this. Look at that pop there in Netflix. So yeah, it doesn't really bother me here that it's under. I like it under 1,000. People know that. I honestly, I think the VIX is a short here. I think the VIX is way out of whack. When people get scared, that's what they do. You buy the VIX as a protection. You short it when it gets way up there, and it's gotten up there. Look, it could go a little higher, and people get scared, and it could be a pop up, but. No, I don't think so. I think we get back to the 18s, 17, 18s, anything under 20. And I think it could happen quickly. I think it could happen like a day or two.
Wow. Okay.
You saw the economic advisor, Kevin Hassett, today talk about this. Don't get, he said, I'll post this, you can see it. He said, be wary of recession talk. He said, expects the first quarter to actually go positive. Right, we're expecting a negative for this quarter, and I think he's right. I think we're gonna have a positive. You're still seeing people going traveling. I saw that the cruise ships were packed.
That actually is a tough one because I watched that interview. Hassett made it clear that in the second quarter he expects to see big losses, and that overall he does feel a recession is coming. So that's actually very misleading.
He does, but it's kind of hard. Look, a recession is. For those of you who don't know, we'll talk about it. It's more than one quarter. That's the downside. So that's a technicality in a lot of ways.
He actually spoke to the fact that we're seeing follow through from Biden's good stuff that Trump hasn't erased yet, but that's going away quickly.
Yeah. I mean, that's ouch.
That was whoever tweeted that out was looking for some clickbait because that was the exact opposite of his. That was definitely a line he said, but it was the first line of a paragraph where he blasted the current administration and the tariffs and the way the economy, what they're doing to the economy.
Right. Well, I mean, he's not the only one. He's not alone. I'm right there with him.
Yeah, Brown-Forman moving up nicely today. So beverage companies here moving up. I can
tell you specifically that people are still drinking. I'll tell you that much.
And this also might lead because Tap A is the other one that's up nicely, which, again, their big beers are Corona and some of these other ones, like Modelo, excuse me, from Mexico. So maybe that, again, kicking the can sort of down the road when it comes to tariffs as opposed to starting them all is giving some breathing room here. There's some of the big gainers. Would you be trusting these gains in some of these beverage companies?
No. I don't think so. I think they're right where they should be, to be honest with you.
Okay. Yep. I can't argue with that at all. Trying to see here if there's anything else really. The only greens are things gaining against the U.S. dollar here is the bottom of my watch list. There is currency stuff. We do see SJM is moving up again here. Smuckers, they've been on a nice move up here. Again, a stock that was under $100 now up at $118.74. So Smuckers Jam is the big winner. I don't think anyone had that on their bingo chart as the Trump trade. Did you?
Not really. I mean, I can tell you that, the question there is jelly, right? It's jelly. And we make jelly in the United States. So tariffs won't affect us, that company. So it's actually a good thing for this company. And they don't really export jelly that much. So this could be one of those companies, U.S. companies, that does very well under the Trump administration. So yeah, this is not really throwing me for a loop here. I think this is actually a good company, run well. It's been around a very long time, and I like it. I think one of the cool things about Smuckers, and if we could, maybe you can pull it up, is their website. Is jmsmucker.com, and you can see that it's not just jelly, right? It's a lot of things. And I think one of the things that they did very well back in the day was they bought Twinkies, they bought Hostess, right? They have Milk Bones. They've got, Dunkin' Brands is one of their things, right? Their coffee. Yeah. They've got Jif, the peanut butter. So not only do they own the jelly side of it, they own the peanut butter side of it. The only thing they probably don't own is the bread itself. So Smuckers has done quite well. And if people are looking to hide money in places, this is what's happening, right? And let me be honest with you about this one. I'm going to pull up if you pull up a chart on JM Smuckers.
Yep, I had it up right here.
Yeah. And I'm gonna try to see if I can pull it up myself for my own thing. The market cap of SJM, or JM Smuckers, is right now sitting at around $12.5 billion. Warren Buffett could shake his pants out and buy the company without even touching his cash. Yeah. Right. These are the kind of companies that he likes, right? That are cash cows, and he likes that side of it. So
this pay a dividend $1.08.
Yeah, this is one that he could very well be buying. Volume today is 87,000. Average volume is 1.34 million. So we know that there's no one in there, big names going in there and buying it. But I do like this. I do like this name for long term, if that's what you're looking for. The volatility is way down. IV is way down. So there's not anybody in there. There's no big names in their institutions buying this, but I do like it though.
Yeah, I'm a big fan of the Smuckers portfolio. Not gonna lie. Baidu up a little bit. They seem to be the only Chinese name up here today. Baba down about 2.93%. JD was down about 2.32%. So they were hit pretty hard also.
Tesla's still slipping here.
Yeah, Tesla 245. Wow. Nvidia struggling to get across 111 right now. 110.50. It was almost to 112 earlier. So we are seeing a little bit of a sell-off. Continue to slide to the downside here. Looking at the tick, slightly negative. Advanced decline sort of rounded out around 3,000 here. Tick VIX has slightly decreased to 2631. Bitcoin falling back a little bit towards the 82,000 mark.
Yeah, I think you can short the VIX here. I'm not telling you what to do, so don't go out there. But yeah, I don't like I think the VIX being up this 13% today. I mean, come on.
Steve, does gold start to get attractive to you under 2,900 here? Never quite made it to that 3,000 here.
It's a good example of what I've been talking about, right? Is if the world really is ending, people buy gold as a protection, right? And we're not seeing that anymore. We've already seen that, right? Gold has already made its move. To me, it's still silver. I think silver is the one that will continue to push higher. I get it. It's more of a retailish play. But I like the silver side of things. I don't necessarily like the gold side of things. But will gold go to 3,000? Yes, I definitely think gold's going to 3,000.
Yep.
There you go. There's
can't get anything open to the upside. If we look at the Spider Select, we do have a few of the sectors moving now into positive. Real estate being led by Redfin, up 71 basis points here, the big winner. Consumer staples up about 60 basis points here. Didn't look at e-commerce here this morning.
2617 on the VIX. There you go. Those of you listened in on me.
Etsy, a big winner today, up 5.77%. Macy's with another update too, 1.56%.
Yeah, I mean, these are companies that are going to get bought, right? I mean, it is what it is. So yeah.
Take a look and see if there's any pumpers here. Kratos Defense and Security, KTOS, one of the big winners so far today, up 7.13% here. So KTOS,
Yeah, I mean, I like
they're
Kratos.
going to join the S&P's small cap 600.
Makes sense. I mean, with Kratos Defense, they are a company that will probably do very well if the talk of war is happening. One of the things I just noticed from Bloomberg just wrote it a few minutes ago that Sweden's exports of military equipment reached the highest level on record. I mean, that's very interesting to me.
Yeah, hopefully that again Europe starts to take care of their own. Yeah, that is a weird one. I wonder what they build there.
James Smucker pushing higher here. It's interesting there.
Yeah, Smuckers. I guess I did see Deion Sanders was eating one of those Uncrustables, which is them on TV making fun of his son at the combine. Made for good television for sure. So maybe that's got it moving up. MSTR and Robinhood getting hit hard here, both down almost 10%. Coinbase down at 8% here. I'll tell you what, Coinbase is interesting to me because they're making more and more of a move into the futures business. As we know, CFTC regulated and, they bought an exchange. I was looking at their stuff over the weekend there. I start to like them down in this area here under 200.
Bitcoin slipping a bit here, 81.6 here. I'm not liking this. It was 83,000 this morning. I don't like this. I get it. They're trying to push it below 80,000. There's just too many buyers under 80,000 to I'm not even paying attention to it, to be honest with you. I think it's the retail selling is a little too much, and let them sell. I mean, that's what it's unfortunate because all you're doing is selling to the big boys, but that's what happens, right? And they're gonna, they're taking advantage of that. And I hear from them all the time. Oh, I'm just trying to short the market. That's which way the market goes. Well, that's right. Yeah, good. Have fun. Enjoy. I'm not in the crypto market to short. I'm in the crypto market to accumulate because I know where the market's going. I remember talking about Bitcoin at $80 and $90, right? Oh, the market's going to crash. Oh my God. I mean, listen, you remember you held my hand through most of that, right? I remember Bitcoin at 3,000. We thought the world was going to end. It was went to 1,900. I remember that. It was sucked. But here we are at 81,000, right? 100,000, 80,000. If I told you that the Bitcoin's going to 250,000, which it is, would you buy now or would you buy at 90,000? Does it matter? No, to me, it doesn't matter as long as you're going to hold it, right? But the problem is, people can't hold it long enough. They're too nervous, and nervousness. They're letting their feelings get into the market. And I've told many people this many times. It's a mechanical machine. It doesn't care about your feelings. It literally does not care about your feelings at all. In fact, it probably hates your feelings. Actually, there's a drop right there.
All right, because let's face it, the market is Citadel and our boy Griffith, and he'd like to walk over our corpses on his way to his new palatial market. 81. Another one way down, Steve, Palantir, 78.95 here.
Yeah, I mean, when people kept asking me about Palantir over 100, no, I don't like it. I liked it better at 30 when I was buying it. I don't like it here. I didn't like it over 100. I was like, no, I don't think so. These government contracts are now priced in, and the FOMO was hitting Palantir. And listen, I liked it better when I was buying it. I don't like it better now. This is what happened, and this is what happens when you have dumb money, and dumb money gets burnt. I just saw the new numbers of dumb money, and it's pretty bad. The amount of money that's been lost in retail is staggering. It's just staggering, and we're akin to almost gambling. And if you ask me a billion times, I tell people the same thing: the markets are not gambling, right? So. And too many people are clinging to those pearl, as I've been calling it, pearl clutching your charts. Stop pearl clutching your charts. Right now, you're probably getting burnt on your charts. Your charts. Oh, my charts tell me this. My charts tell me. Your charts don't tell you jack crap. Your charts tell you where the market was. It's just telling you where the liquidity was and where it's not. You don't know where the liquidity is now. Tell me where liquidity is. It won't tell you that. It'll tell you where orders are. It won't tell you where liquidity are, so they can spoof that, right? What they are telling you is where the price has been, and it's a good indicator of where the price could go to. But the minute the news comes in, all of a sudden, nope, your charts are meaningless, right? I think Brian Shan does a very good charts with anchored VWAP. I think if you're going to use anything, use anchored VWAP, right? Because that's not just VWAP, but it's telling you where the anchor between the two tops and the bottoms are. And it tells you there's a better probability of going there than, well, my charts tell me this, or I'm trading this style. There's 50 million trade strategies. I promise you, I know most of them. Right now, if your charts look the exact same as your charts did last month and you haven't changed your charts out, your charts are wrong, because there's what's different, because now we have inflation that's rearing its ugly head. We now have different things that are, and I think I told this over the weekend, you need to have Donchian channels on your, what's Donchian channels, a big beat? Well, there's a lot of things I can talk to you about. I think another one, because you're seeing high volatility, if you're just using some of the legacy stuff like EMA and things like that, look, I would tell you to use Elder Sports. Why? Because now you're implementing volatility. So your charts probably should be different than you're using it right now. Bollinger Bands are good right now because they're probably widening, right? Because the prices are widening. Those are good right now. I think it's a good time to have Bollinger Bands on there. Probably reminds me I should probably go reach out to him and maybe have him chat about Bollinger Bands on here. But I think that one of the cool things about this is that you have charting available to you, and it's good. But you also should have the news on your system. You should also have people that have been doing this a long time, like us, who can help wade you through these bad problems, right? You saw NVIDIA just dropped there. You saw Bitcoin just dropping there. We went right to the EMA number, right? Great. That's where the pricing was. But that's not what's happening, right? Tell me what Trump is going to say about Bitcoin tomorrow, and I can tell you where the price of Bitcoin is going to go. Tell me if the state of Texas starts buying Bitcoin, I'll tell you where Bitcoin is going to go. And it ain't going to be because your charts. It's going to be because there's physical buying. So there's a lot going on here that I think that people need to not pearl clutch your charts so much, as I've been saying lately.
Absolutely. NVIDIA down around 110.54 here. Apple is down around 230.23, so not seeing really any bounce backs yet. A little bit of a bottoming here on an Apple, maybe we could see here on a short-term chart, but not seeing it so far. Tick still down 35. Oh, there we go, a little positive. Advanced decline sort of settled in this negative 3,000 area here today.
I am seeing real quickly, both on Down Detector, X Twitter is down for a lot of people. I don't know if yours is down, mine is down. Microsoft is down right now. We're seeing that too as well. So seeing some issues here.
I'm seeing I'm not getting fresh data here.
Microsoft 365 is also having problems here. We're seeing some issues here. Microsoft Teams, shocker there. Facebook is also having some issues here. So looks like we are seeing Social Security, SSA websites having problems.
Yeah, I don't know if anyone's seeing us right now, because I just noticed that our user thing, which never sits in the same position, is completely locked at 9:06 there, Steve. Yeah. I mean, we're still going to talk. I'm just letting you know. It looks like we could be down, though. I mean, it looks like everything is, like you said, I can't see it. I'm going to check and see.
Wordle is down. Disney Plus is having issues now. So it looks like we're having some serious issues here.
Looks like we got a little bit. Oh, I do see us. Yeah, we're on YouTube. YouTube's up. Well, you guys got us. So YouTube is still working here. That is still working. Like you said, let me check the X feed here. Definitely down there. So we are still going out to YouTube.
I see X just popped back up on some of my stuff now. So I think we might.
I also do see that it's 10 o'clock. Mr. Flanagan is not in. He was going to, him and I talked on Friday. He is all excited to do his own thing here today. So I think he might have a problem getting in here right now. We'll give him a minute or two. Steve and I can keep it going here while we wait for Mr. Flanagan in. Steve, you need to run away. I can definitely keep us going. Tick is down about 306 right now. Advanced decline just moved another 300 to the bad side. So something just spooked the market there, Steve.
Probably because the market, probably because nothing's working right now.
Yeah, yeah. The only people who can get in. Mr. Flanagan, I do see is getting in here. So let's bring him in. Let's
And
have
I'll
a
see
little
you guys
talk.
later. So,
Mr. Flanagan, how are you doing today?
Doing good, gentlemen. Hope you enjoyed the weekend.
I did. I did. Lots of stuff going on. I know you're going to take control of the screen here today, but I got a couple of stuff for you before we do that. China. Deflation, stimulus measures, consumer price index fell fastest pace in 13 months. What's going on over there?
That's right. And, Howard, we've been discussing this theme for quite some time now that, emulating what happened in Japan, China is up next. They've got a perfect example if they just look, but the deflationary spiral is starting to take hold.
Right.
And it took 20 plus years for Japan to get out of it. What is going to be needed here is that the Chinese policymakers are going to have to ramp up substantially fiscal measures to boost consumption. In absence of that, these little pinprick type of responses that they're making are just not going to work in today's marketplace.
Yeah, and I saw it's going to be a busy week in Asia. They're negotiating wages in Japan. That has the BOJ maybe spoke a little bit. India's inflation finally dipped. Are the RBI going to cut? I'm sure you're going to get into a bunch of this stuff here over the next 20 minutes or so. So I'm going to let you get at it, Mr. Flanagan. You want to start to share your screen before I dip out?
Yes, sir. I'm going to share my screen and bring right up the dollar index. I think that's one that we probably want to take a look at. Let's see. Here we go. So with the dollar index, the important part that I want to make sure that we take a gander at here is we've got a 103.30 level as big support. Now we can see from a daily chart how quick this move has happened. So what that means is that typically when you see a move this sharp, it's not just going to bounce straight back. You're going to have a period of consolidation because lingering above us are going to be all the positions that are trapped, in this case, long of the dollar index. Those that have been forced out due to margin clearly showing in this chart here. So 103.30 is the big support point. I highlight it because if we come back into this zone, we can see earlier at the end of last year, September, October, November, we had traded down to the lows. And this point was a consolidation zone that broke down. And as we trade back up, hesitated. But once we broke, we've never been back to that level. We retested. And this is the important part of technical analysis. You've got to be able to look back in technical analysis. And you can see the significance of this test right here was what set the move up. Now, bring it to today. Look where we are. We're retesting this entire zone again. So while I'm not advocating jumping into a long dollar index play, what I am suggesting is that the move, most of it is over. Right now, you're going to probably be in a consolidation zone, sell the rally, buy the dip. But the key level, if you are going to bottom pick here, 103.30 is a significant support zone. I'm kind of thinking that we have about a 104.40.50 zone as our first objective on the top side. Now, if I try to share yet another screen with you, let's see if we can manage that. I would like to just jump into its largest component, the euro dollar, because the euro dollar really, it's over 50% of the dollar index play. Again, very significant. If I go back and look at the way we topped out. We're just shy of that top, but look at this trade. And we're back well into 2023 4 here. And the other point I would mention, again, We can get caught up in the day-to-day charge in the marketplace. But it's important when you're trading currencies to have a bit of a step back. Now, if we're going to be a day trader, a little bit different. But you must understand and know the zone you're at. The point I want to make here is on a daily chart, one top, two top, and a lower top. Now, for a Eurodollar bull, this pattern must break, which means you've got to significantly get above a 109 zone. And I don't think you're going to necessarily get there. 108.33 right now. I'm looking at last Friday's close of 108.42. We're beginning to slip down below that. So that's a significant zone for me to begin to say that the dollar index or the dollar's move down is beginning to wane here. And I'd be looking for, not going out and going crazy here, but I am looking for perhaps in around a 107.50-70 zone as a corrective low. The last chart I'll just bring up real quick would be the dollar yen. The dollar yen, of course, is the most interesting of all charts because of what's going on, the dynamics going on in Asia today. And when I look at the dollar yen, clearly it's been in a straight down move. And now we're all talking about Bank of Japan raising rates again, wage negotiations going on. You've got significant support, 146.70. Let's bring it all the way back into this chart formations breakup. You can see how that Friday's close was 148.10. We're presently at 146.95. So dollar yen's a little bit different play. If the dollar were to rebound, the dollar yen is one that I would be hedging along dollar by looking to buy yen. Not at this particular level. I think I can see above a 150 level before we trade back, into a 148, 153 type of range. So that's basically the charts that I'm sharing there. What I'm looking now is what is ahead of us. The financial markets are rocked right now by uncertainty. That's really what's going on here. And when uncertainty happens, if you're long, you're hitting the bids immediately. And it's happened against all the marketplaces because it's important with computer trading in 2025 to understand everything is correlated. So if one market breaks, it causes a reaction in another market. Look at all the financial instruments. Everything is down just about, even gold, Bitcoin, equities, treasuries. So let's look ahead. Tuesday, JOLTS. Wednesday, CPI in the U.S. probably going to come in slightly lower on the year, maybe dropping as low as 2.9, outside chance of 2.8. Now, that would be a significant signal to the marketplaces given the uncertainty of the Fed. One other thing we'll add in, Bank of Canada. They meet on Wednesday. Now, the new prime minister waiting is a central banker. So it'll be very interesting. I'm expecting a 0.25% decrease in Bank of Canada just to give it that last push of stimulus, especially in the face of all the tariff talk. But let's look at one thing that happens tomorrow. Greenland has parliamentary elections. They only have 31 seats. You need 16 for a majority. Let's just keep an eye on the pro-U.S. party called Nalarak. I hope I pronounced that correct. They currently have 5 seats. They're looking for basically, first they're going to have a parliament, then there'll be a motion if somebody gets the majority for independence. Now, most of the parties are looking for independence. It's the time frame that they're all looking at. Many of them look for significantly longer. But that's just something to keep on the board. Further, Another point out there that goes with, are things overdone right now? Let's keep in mind that Bank of England's policy voting member, Mann, has argued against a gradual and cautionary monetary policy easing approach. She also has said that the founding premise for a gradualist approach to monetary policy is no longer valid due to the substantial volatility coming in the financial markets, especially from cross-border spillovers. Well, that argues into the correlation trading that I'm talking about. A large trillion-dollar fund is not just long U.S. equities, even if it's a U.S. firm. It's got a broad array of exposure throughout the world: India, China, Europe, and the U.K., just to name a few, Norway, Sweden, etc., right down the emerging market list. So when these computer models move, they move rapidly. Now, we've been talking about this for as long as I'm doing this show with you. Markets move fast. Money moves fast. And the reason, finally, we see a central banker coming up and saying and recognizing, if they want to have an effect with monetary policy, gradual is not working. So I have been following Mr. Goolsbee out of Chicago. He is a person with a background, an academic background in some of our high-frequency markets today. So that's somebody I want to watch very carefully for the comments to come out, which would further give me a little bit of ammunition, because inflation in the world is coming down. Just look at China now slipping into deflation. We fought the deflation in 2008 and pulled ourselves out. It hasn't been eradicated. Inflation was a COVID era response of prices going up because of supply side. That's behind us. We should now be looking at the potential of pricing coming down, especially as automation gets thrown in. So the Fed needs to get in front of this marketplace. Otherwise, the uncertainties that we've seen are going to begin to take hold. So be decisive, Fed, and make your moves. Outside of that, currencies are going to be something. Let's keep a dollar-yen on your chart. Anything that you're trading, you should have dollar-yen, because that's the most interest rate sensitive currency. Howard, do you have any questions back to me before we wrap it up?
No, I think you nailed everything perfectly. My thing would be, definitely when talking about Greenland, I went and took a quick look there. As you said, March 11th, the Intuits are the leading independence advocates. So we'll see what happens there. I'm not going to try to say any of the other parties there. I give you all the credit in the world for that. Fed, I don't know if you saw, I put it across the bottom. Now we're seeing that, traders are pricing in about a 75 basis points cut. As you've said, as Steve said, as I agree 1000% with, let's get to it sooner than later, because you're holding us back. You're holding these markets down. I am still firmly in the cautiously optimistic position where I'm going to wait to see things hit certain levels. I had mentioned, and unfortunately it's moving away from it this morning, was I was hoping the SPY was going to regain that 200, simple moving average, and that would give me sort of a leading indicator that maybe we're getting out of this. Steve was looking at VIX as a big indicator. I do believe that, but VIX to me just moves too rapidly. If money moves fast, VIX moves at lightning speed, right?
Well, VIX is the indicator that's out in the front, out at the fender of the car.
So I did that. But thank you so much, Mr. Flanagan. Great stuff there. And we'll see you on Wednesday.
See you Wednesday, Howard.